All right, YouTube, Stocks by the Numbers, welcome back. We just finished up the day here. Obviously, Fed came out, said they're going to keep rates where they are. Now, technically, we're still at 22, 23-year highs or whatever, but I guess technically the fact that rates were not raised, everyone basically looked at that as a huge positive, and markets obviously exploded. But what I wanted to talk about today was the phenomenal bidding war that I mentioned will most likely continue to take place because the bids were just severely undervalued in comparison with the actual business that this company brings to the table. Name of the company we're talking about, United States Steel Corporation, ticker symbol X, listed here on the New York Stock Exchange. Now, we've spoken about this company on several occasions. I mentioned it about a dozen times in the Discord over the last several months. So I made this well aware to everyone that, in my opinion, looking at the numbers, looking at obviously the sector that they're in the steel industry, that this company was required. And of course, the fact that they're bringing in billions of dollars every single quarter, not even year. And now, after this huge explosion, the market cap still only 8.6 billion with a PE of about 8. So in my opinion, I still say that there's still value here, but just a quick review. We first initially looked at the stock, I think it was right here, about mid-tail end of June. Stock was sub 20, and obviously I mentioned that, again, I liked it personally. I brought it to everyone's attention. And as you see, over the months, it had a really nice rally. It sold off here about halfway through, began climbing back up, getting above that 25 level, and then boom, right here, mid-August, that's when we did another update video on the buyout bid that came in. I believe it was around $35 a share, and the stock was still sitting at 30. So I did an update video saying basically, long term, you just made over 50% plus collecting, a handful of dividends. And we may even have more potential growth getting involved into a bidding war. And I recall that I think as I was basically ending the video, another buyout bid came in. And this is what I'm saying. This is why, in my opinion, fundamentals trump technicals, especially when we're talking about, obviously, longer-term investing. Now, granted, again, obviously, this had its ups, it's had its downs, and it took, we're talking like a year and a half now. However, if you really think about it, time flies a hell of a lot faster than we want to admit, and even faster than we actually realize. So, if you look back, a year from now, looking at the positions you had, how you were trading, I'm sure, I would assume, you're pretty much kind of in the same situation. So this is why I always talk about the compound investing as well, doing the DRIP, the DRIP, again, dividend reinvestment program. When we talk about the blue chip stocks, like your IBMs, your Verizons, your Philip Morrises, right? They pay you dividends to own them. You hold them long term. You get growth on the capital, plus you get dividends paid out, reinvested dividends into more shares, so on and so forth. But here, now we have the best of both worlds, because we had a stock that was, again, tremendously undervalued, so we knew over time we were going to have growth. We're getting paid to own the stock. And then, of course, again, with the bidding wars coming in, even here on this pop, on the news of the bidding war, you can see the high of the day was about 32.5 when the bid came in at 35. So that's why even when it bounced around here, I was still saying, in my opinion, that it's going to go significantly higher. On a minimum, it should get to 35, which is where the buyout bid was. And then, of course, I mentioned that they're probably going to feel that that is a low ball and they can get more. And right now, today, markets closed recently, stock 38.59 on the close, up 220, over 6% here on the day. And if we check out the recent news articles, you can see that US Steel rises on report of multiple bids. Not one bid. US Steel rises on report of multiple bids in excess of $40, meaning it wasn't 40. It was 41.5, 42 and a quarter, 43.20. These are in my opinion, these are the bids that came in. And this is why now everyone's scrambling for shares. But the difference is they have to buy it up here at 38.5. I first brought it to your attention, less than $20. That's the difference here. That's what separates the men from the boys. So that's what I mean. People, Again, the investing side, in my opinion, significantly easier than the trading side because you're eliminating that time limit. This is what I said as soon as I started the channel. I said, even in the Discord, you guys want to come in. If I see any, head and shoulder pattern setting up or something for the short term, I'll try to mention in the Discord. And, if I had free capital in that moment, that would most likely be the play I would personally take. That's what I said I would try to call out for you guys in my Discord. Just give my opinion and show you guys the couple of positions that I would take personally. Now, of course, not everyone is going to go 10 for 10. And sometimes people forget that when you begin to roll on all cylinders and really start to see success. The problem is people think that you're so in tune with the market and you're making such great calls and have such great analytical skills that you are not expected to be incorrect. So when markets really began rallying there throughout November and continuing now in December, I was calling puts in the short term. And that's what I mean. This is the difference here. When you try to time a reversal or a top now and it's going to sell off, or you try to time a bottom and you try to buy calls for the next week or the following week, and you try to time the rebound, that is when you're exposing yourself to significantly more risk than you might have to. And again, I know I'm going off on a tangent here. We were talking about US Steel. But the point is, again, in the short term, we may be unsure if Dow is going to go up or down. So we may not know whether we should buy DIA calls or puts, or should I buy them a week out? Should I buy them a month out? On the flip side, though, obviously, as the Fed meeting concluded and markets continued to go higher, everything else pretty much went higher, as you can see. But it was easy to know what would immediately go higher. Now, I know, again, you're sitting there saying, well, the market's just exploded and we just said everything went higher. So what do you mean? What I mean is, this is why I like to, again, in my opinion, utilize the Buffett method of finding brand name companies that are trading at discounts. Because now here's the difference. You see something like a DraftKings that I believe went from red to green, now up over 2%. Rivian ended up exploding. I think it was green, but as you see, ended up closing up over 8%. Tesla just recalled 2 million vehicles and was down 3% and ended up closing up 1%. That is how drastic of a move that we had. And now the difference is, a lot of these moves here were mostly momentum plays coming off the massive green of the major indices. Now, granted, a lot of the companies that I called out in the Discord, companies like Campbell's Soup and Hershey's and even PM, I mentioned to buy calls on as the markets began to rally. And again, obviously, I was right. But the point I'm trying to make is, now going into tomorrow, if markets are flat or down for some reason, these stocks that I mentioned, Campbell's, Hershey, maybe even PM, these stocks are more fair valued and would have actually been considered undervalued and could be viewed as a discounted buy before the markets began their explosion. So what that means is those companies that I listed have a higher chance, a higher probability of maintaining this move and actually continuing higher, even if markets do not continue higher and continue climbing to new highs. Whereas something like Rivian has a lot of potential now to be down 2, 3, 4% tomorrow, regardless of what's happening. You understand what I'm saying? Something like a Tesla, again, most likely after the recall, I understand it rallied today with the rest of the market. It ended up closing green. I believe it may have touched that 240 mark, but chances are, in my opinion, Tesla should go back down 2, 3, 4% tomorrow because they just got hit with a negative catalyst. And of course, the green day today, again, coming off the market momentum, if you will. But US Steel, just absolutely phenomenal. Again, $8.6 billion market cap. We have a PE of 8. I mean, this company tremendously undervalued. I said back here, conservatively, the stock could go to 50. Now they have multiple bids coming in above 40. And of course, the more I look at the numbers, the more I like it. So this is why $50 stock, you're still talking about a 30% move, kind of. Which means we can get to maybe about a little below $11.5 billion market cap, which, as we see, the company's bringing in 4, 5, 4, 4, 5, 6. The company's bringing in billions of dollars every quarter. So, if we evaluate this the way we evaluate a lot of other stocks, then we'll probably come to the conclusion that this company can easily break up higher to that $50, potentially even $60 level. Now again, this whole time, this whole rally was because it was undervalued for the most part. And now this whole rally, this whole explosion is because of the buyout bids. So again, even when the buyout bid came in here and the stock jumped up to 31, 32, I knew in my mind, again, I can't say that I guarantee it, but in my mind, it was a guarantee that the stock was at least going to get to $35 because that's what the bid was. And now again, as we see, we have multiple bids coming in now above $40 a share. And again, even you know, like conservatively 10, 15% higher. I mean, you're still talking about like $10 billion or less as a market cap, which again, still in my opinion seems undervalued. But overall, I do still like US Steel. And again, this is why I prefer longer term investing as opposed to shorter term trading. Because as I mentioned earlier, I'm sure all of you a year and a half ago back at this point were, you know, still watching videos on YouTube, still trying to find, you know, the next big trades, the next big investments. You were still tracking the market. Most of you are probably still working at the same job you did. That, you know, so the calendar changed, but overall, for the most part, your life in general, but more importantly, your trading life and your investing life is probably pretty similar to where it was about a year and a half ago. And this is the point I'm trying to make. You're better off buying brand name companies at a discount and giving it time to grow to where it's more fair valued, right? Because we know it, again, we don't know exactly what's going on, but we know that when a stock is undervalued, if you give it time, it slowly climbs back up. And that's what I mean. Even a move like this, where are we here? March. The beginning of March, the stock got above 30. Here we were June. We were at sub 20. So what's that, 9 months? Oh no, I'm sorry. Yeah, 9 months. That's not even a lot of time. And again, a situation like this, we're looking at almost 100% return while we got paid 1, 2, 3, 4, 5, 6 dividends. 6 dividend payments, almost 100% return on our principal, and it's a long-term hold, which means if you listen to me here and you got in, and obviously you're still holding, you stand to gain over 100% return on your principal, plus dividends, plus you're paying now about half the amount in taxes. So this is why I say work smarter, not harder. You know, here if I said buy calls on US Steel, then you see it drop down to 17, 16, right? You could have said, oh, you got it wrong. This guy doesn't know what he's talking about, blah, blah, blah. But again, you're asking me to try to time a momentum move on a very short-term scale, when stocks, as we see, need time. And if you're going to turn around a year from now, 2 years from now, and again, you're still going to be at the same job, doing the same thing you're doing, taking some excess cash, rolling it into your investing account, and looking to buy stocks, that's what I mean. If you're going to be technically in the same mental mind state a year from now, 2 years from now, then, you know, in my opinion, don't yawn in the face of situations like this. Because, again, brand name company at a discount. We're taking what the market gives us, essentially knowing with high conviction, 95% conviction, that over time it will rebound, it will grow for us. We will be supposedly more stress-free because we won't have to worry about it, and we'll just know one day down the road we'll be able to take some nice profits. And again, in the meantime, we're getting paid to own it as well. So, that's why, again, there are the micro visions out there that could explode from $2.25 up to $7 a share, and oh man, you missed out on it. Understandable. But again, the wealth comes more from longer term investing. Because, again, I wish you all the best with all the short term trading, but obviously it's more risky. And of course, it's less consistent. So you may have people out there who, oh yeah, I bought ABC at $3, we squeezed it, it went to 10, I made like 300%. Fantastic. The problem is, though, it's not consistent. And for all you know, the next 2, 5, 10 trades after that may have not really worked out. And it's unfortunate because you just had a nice return and made this nice profit, and now you're just kind of slowly giving it back. Because again, a lot of people out there are just trying to take extreme risk, just trying to 100% gamble, and people open the accounts, they throw in $500 and they try to turn it into $500,000 within a month. So that is why, at the end of the day, unfortunately, like 95 to 99% of people in the markets end up losing. Now, we could take a look over here at stock charts. We can see how tight the Bollinger Bands have been. The stock one time sold off and came back down to the 50-day moving average, and of course immediately bounced and went higher. So since the middle of August, the stock has touched the moving average once. And now, again, as we talk about the moving averages and the slow, steady growth that takes place over the months and over the years, we can see that at the time of this buyout, this 50-day moving average was sub $24. Now it's $34.20. And again, same thing with the 200-day even. Sub 25, now it's right around 28. It's about a 15% move. So this is why I say, in my opinion, slow and steady wins the race. Looks like the MACD again was maybe potentially about to cross to the downside, and then we got the news today that we have multiple bids coming in above 40. So in a situation like this, now we're involved into a bidding war, and we're looking for the quote-unquote more fair valuation of the stock that is closest to the potential buyout bid. That's why I'm saying, in my opinion, the fact that they said it was, north of 40, or what was the wording exactly again? Multiple bids in excess of $40. That's what I mean. So the bid wasn't 40, it was above 40. And conservatively, that's why I'm saying probably anywhere from like 41.5 to it could be $43 to $45. And that's why I'm saying, in my opinion, even after this rally, yes, it could potentially start to sell off for the next 1, 2, 4, 5 days in a row. I don't know. But I do know that when bids come in at higher prices, that is what someone else is willing to pay for it. That is what Wall Street now determines is the minimum fair value for the stock, so to speak. So that's why it may take another week or two. And again, after these bids came in, you can see it dipped down and then it had the rally, but then it sold off again back to like half of where it was after the pop. But remember, this whole time the bid was for $35, right? But it came back down to 30. So this is what I'm saying. If you're asking me, should you buy calls on X for this Friday? I couldn't tell you. If you're asking me, given some time, is this stock going to go higher than 38.59? In my opinion, I think it has to. But that's just me. That's just me. The RSI, again, up here north of 82.5. However, again, we're dealing with the situation where we have buyout bids coming in, a lot of new volume, some FOMO coming in. So unfortunately, the RSI cannot be our indicator here in this situation. And we can see the same thing, random ad, we can see the same thing happening on the weekly here with the RSI now above 70 for quite some time here. And we can see here the RSI sitting at 76 and a quarter. And in my opinion, I do think it keeps going. The MACD consistently climbing. Top Bollinger Band here, about 39 and a half. That can easily happen, of course, because we have multiple bids at $40+. So that's why I'm saying, in my opinion, technically, at minimum, the stock should get into the low 40s. And I'm going to end it there. So once again, this is Stocks About the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are very rocky. They're very uncertain. We pop, we drop. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. I'll see you guys in the next vid.